Welcome to Let's Talk Real Estate. On today's episode, I have the pleasure of interviewing Nury Espinoza. She has an MBA and is a certified tax preparer. Nury, thank you so much for joining us today.
Thank you for having me, Nina.
Of course. You know, I just felt it was really important to bring you here because I do work with a lot of potential homeowners or even new homeowners, and they don't understand really what are the benefits of having a home as far as tax benefits or overall being able to create wealth. So can you tell us a little bit about how is it that they can benefit from becoming a homeowner?
Yes. Right now, there's always been that push and pull of whether or not you should buy because of, taxes are high, rates are high. But when you wait for rates to drop, you buy high. And if you have rates that are high, then you're buying low. So what's good about that is when you do buy high, you can always refinance, but you still get to buy your house pretty good and the location you want, and so it's always good to be working with a realtor and looking and kind of go with what you're looking for. I think it's always more important to focus more on your dreams and say, where is it that I want my family to be safe in, or where do I want my kids to go? And once you do that, that puts you, things kind of start falling into place, so everything will kind of work out, and it's a write-off. You got property taxes, and you've got mortgage interest is also a write-off. And then if you make investments like solar or anything that is environmental friendly, those will also be write-offs. So, putting money into rent nowadays is kind of, you're making a landlord rich, but you're not making your family wealthy at all. There's nothing that helps there.
So Nury, can you tell us a little bit about the write-off? So what does that mean and how does that look like when it comes to tax?
Yeah, so there's a place on your taxes that's called itemized deductions, and you get to write off, and it's going to be changing pretty quickly here this year. There's a new law change, but it was capped at $750,000 for mortgage interest, and of course for California, that's also, you're talking houses here are much more expensive than that. So now your mortgage interest will get to count higher for that. But at least your rental income or rental is not going to something that is not going to get written off. So now when you itemize all of that, you get to itemize your mortgage interest plus your property taxes. You add in anything. You probably are already a charitable person, and you've got DMV fees that you pay your car. Everybody drives most of the time here. So when you add that up, that also gets deducted instead of your standard deduction that the government gives you. Okay. So then that helps you have a larger write-off. And for some reason, sometimes there's years where you might have a little bit of a larger medical expenses. That might also work out in your favor to have that written off. I mean, nobody wants you to be unhealthy or have any of those expenses, but sometimes it happens. Those medical expenses, I've had clients, we all love our children and we have expenses that you don't think that could be written off. There's family therapy, there's ophthalmology, there's it all adds up after a while where there are medical expenses that are not covered by your health insurance, and even treatment for outside of for autism or for IVF, people who want to have families and aren't able to, so you find different methods. That would be right off also.
Oh, that's interesting.
So those particular years you would have a larger write-off.
So if you're a homeowner, you can write off the property. And what if you're self-employed and you use your home as part of your office? Are they able to write that off too, to some degree?
Oh, yes. If you're self-employed, you also have that. So self-employment has, if you you've got health insurance, that's 100% write-off. And then you've got your home, so it would be like a section of your home that you would write off. Depending on where you're living though, we would have like that office space that we call that area that you would normally rent out. So if you're not renting at a WeWork or a place where you normally rent space for like $1,500 or more, you kind of do an equivalent of what your home would cost if that's the location you choose to work out of. So I would normally count that, what somebody else would rent that space to you. And then anything that you kind of, this started happening during COVID because in California, you can still do home office expenses. So if you paint and you buy a desk and you buy your laptop and you kind of make the space more of a place for you to go work, feel like I'm really working but it's no longer like your home, then all of that is is also a write-off in California. So that's about 10 to 13% for most Americans. So that would be good here in California. And then for federal, you've got that written off too.
Make sure to save your receipts
if you can. So
Nury can help you with that too. But Nury, I also wanted to talk a little bit about those new agents, realtor agents, in their first year of business. What are some of the things that they need to be aware of, that they need to keep track of in order to be able to write it off because they are self-employed? Can you tell us a little bit about that?
For real estate agents specifically, they should be tracking their mileage. That's a big one for them because you're driving everywhere. You're getting all kinds of clients, and it's the biggest way for you to add value, right, for your client. I know as a homeowner myself, like you've got to, if you're gonna win your client over, you need to show them what they're interested in. And you've got to go out there and do your due diligence and do your homework and go probably preview that house before you even show them the house. Make sure it's a good fit before you show them, right? So you're adding miles and driving all over the place to make your clients happy. And so there's miles tracker, there's QuickBooks that does a mileage tracker, and it's really simple. It's on your phone. If you connect it with always tracking, it's always going to track your miles. You keep your receipts. If you're using your credit card, it's not good enough in case you do get audited. It's not good enough just to have it on your credit card statement. You actually have to have your receipts. So make sure, like if you're worried about them like kind of rubbing off after a while, make sure you scan them somewhere. And that's another thing that QuickBooks helps you with, because you can take a quick photo and it'll email you to your own email address. So it'll go up into your receipts into your application, so on the cloud. So you don't have to maintain your receipt, it'll be there already for you. And then the other thing for realtors is that you're maintaining your office supplies, your dues, your certifications, and your conferences. Make sure you go to a couple of conferences and you get your continuing education. But all of those receipts are important. When you're going to pay for your meals, if for some reason you do get an alcoholic beverage, separate that from your receipt if it's easier for you, because that won't count as a 100% meal. But everything else would count, because if you're doing meetings with your colleagues or clients, it makes everything much easier to keep track of.
So essentially, keep all your receipts.
Yeah, definitely keep all your
Not just your statement, your credit card statement, keep your receipts.
Exactly.
And then if they need help categorizing that, would you be able to assist them with that?
Absolutely. I have a couple of clients that we do bookkeeping for real estate.
Okay.
We also help you convert to an S Corp. Like if you are on commission, of course, you get a couple of big checks a year if you at least sell 2 to 3 homes. And then we can help you also have your payroll so that you would have that check, but you're also paying federal taxes, so you don't have to worry about estimated taxes during the year. Because that makes some people nervous. Keeping that budget as a realtor is very hard when you're only dependent on, commission. And so we help realtors with that, like just kind of tracking your budget and making sure that, you can grow that money also, but also, as you were saying, like as we called it, like, building your wealth is important to us. So with an S Corp, you're able to keep that out of your personal taxes and still show, if you have growth, if you have a profit, great. If we can kind of be aggressive with your expenses, better, and then it won't show on your personal taxes the same way.
Okay.
So that's one of our other strategies with Accounting Breeze. It's kind of what we kind of help clients do.
So their business entity
Mm-hmm.
and streamline the process of figuring out the tax situation, because I think that's one of the main things that a lot of the agents in the first year don't realize, that there's that back end work, and if you only have a reliable affiliate to work with, you can really get yourself in a lot of trouble, or end up having to pay a lot of taxes because you didn't deduct as many things as you should have been able to. So definitely reach out to Nury with any questions regarding that. She has helped me in the past, so I would definitely recommend her. But Nury, I appreciate you coming over, and tell them where Accounting Breeze is located in case they wanted to reach out to you.
Yeah, thank you. So Accounting Breeze has been around for about 11 years. We're in El Segundo, but we work remotely. We have clients all over the United States now. And we're happy to help all industries, but definitely love helping self-employed clients grow your income, retain your profit, and give us a call, 310-363-7055.
Thank you, Nury.
Thank you for having me, Nina.
Of course.